So Bitcoin is powered by chaos because chaos will never go away. It's always going to devalue all of the traditional physical and financial capital assets. And it's going to be the driver that causes all the smart money in the world to run, to sell their physical and financial assets and to buy a digital asset.
Michael Saylor highlights Bitcoin as a unique asset powered by chaos, resilient to the risks that plague traditional financial systems. Unlike physical and financial capital, Bitcoin thrives in instability, as crises drive smart money to adopt it. He emphasizes Bitcoin's borderless nature, immune to confiscation, inflation, and political games, making it a long-term safe haven for wealth. Saylor distinguishes between traders, investors, and maximalists in their approach to Bitcoin. Traders focus on short-term market moves, often missing its long-term potential. Investors view it as a dominant digital monetary network poised for massive growth, while maximalists see it as transformative for global economic empowerment, backing it wholeheartedly. He explains that Bitcoin's increasing adoption by institutions like BlackRock and Fidelity reduces volatility and enhances stability, driving prices higher. As the network matures and banks simplify access, Bitcoin will become harder to acquire, cementing its role as a superior asset class in an uncertain world.
I think there's a lot of double reverse logic that takes place in the macro trading environment. Like, for example, if you knew there was lots of inflation over the long term, the number one thing to hold is Bitcoin. But when people print a big inflation number, Bitcoin will trade down in the short term. But the double reverse logic is inflation is high, therefore the interest rates are going up, therefore money is getting slurped out, therefore I should find something to sell, so I'll sell Bitcoin. And that's why I would say there are basically two ways to think about Bitcoin. Actually, there's three views. There's the trader, there's the investor, and there's the maximalist. Okay, the trader says it's an asset, I can get a handle on it, I can 50x lever it long and short. They're obsessing over whether or not good news is coming, because good news is bad news, and bad news is good news, right? And then they want to make sure they're the first one to get the bad news so they can treat it as good news, so they can get out of the trade before the bad news manifests, or something like that. And if you're one of those traders, you know who you are, and more power to you. I'm not that guy. Then the investor view is, this is the dominant digital monetary network in the world. It's going to go up by a factor of 10 to 100. And I'm just going to hold it like Apple, like Facebook, like Google, like Microsoft. I'm going to hold it like my big tech monopoly for the next decade. And it's going to jerk around a bit, and I'm going to buy it on dips. The maximalist view is, this is property rights for 8 billion people. This is the greatest opportunity of the 21st century. This is economic empowerment for every business, every country, every family, every individual, right? I'm going to support it at all times, every way I can, forever, okay? And so you're talking to a maximalist here. It's not my skin is in the game. I'm beyond that. My soul is in the game. Thomas Lee, he's done some good work, and he says that Bitcoin generates all of its gains in like 10 days a year. And that just means that, you know, somewhere like 98, 97% of the time, nothing is happening and you're waiting for something to happen. I would say every macro theory about if the bad thing happens, that's good, and if the good thing happens, that's bad, and if enough bad things happen, that's really good, because then a bad thing will happen, which will be good for us in the midterm. I get it, it's all true, but I just don't choose to play the game. Look, Bitcoin's going to grind up 30 to 60% a year for the next 20 years, and my long-term risk cost of capital is like 29% for 20 years. That being the case, rather than try to time the market, it seems to me like a better idea would be go mortgage your house for 30 years at 3% interest or 6% interest, and then make an investment for 30 years that where you have 6% cost of capital and get 30% return on the capital, and you're getting 24% boost. So I think it's much better to figure out how you raise capital and lever the trade. or how you build a business that actually cashes in on that volatility instead of being the day trader trying to guess the volatility, because it just seems like, it's a fool's errand for the average person.
Michael Saylor views Bitcoin as a resilient and transformative asset that thrives during financial and geopolitical instability. Its decentralized nature protects it from inflation, confiscation, and political risks, making it a reliable store of value in uncertain times. He identifies 3 types of adopters: traders focused on short-term gains, investors who see its long-term potential, and maximalists who embrace its global financial impact. With growing institutional adoption, Bitcoin is solidifying its position as a premier asset in the financial world.
The equity and the beauty of the network is it gets exponentially harder to acquire Bitcoin over time, and that's what makes the network secure and stable, and that's a good thing for all of us. Bitcoin has matured over 4 years, and that's a good thing. We used to have extremely highly levered, poorly capitalized companies driving the market, like the offshore exchange like FTX and Three Arrows and Terra Luna and the like. And the market has matured such that now you have large pools of more permanent capital, like BlackRock's capital, IBIT or Fidelity or Wall Street. And that will create less volatility, lower drawdowns, but it will drive the price up. And on the other hand, it's kind of like saying, your family came to Manhattan in 1700 and you bought up a bunch of land, and then you went back to Europe and you told everybody that Manhattan's going to be the greatest seaport in North America. And here we are in 1800, Michael, and your family owns like 47 blocks of Manhattan, but the prices of Manhattan real estate have gone up by a factor of 20. Isn't it getting it harder for you to do business in Manhattan? And the answer is, well, the price is going up, but there's a lot of other people that are in Manhattan that do things that we can't do. And I'd much rather have other businesses and other pools of capital, like on the day that Apple and Microsoft and Google enter the Bitcoin ecosystem, the price will go up, but the risk will go down. And one of the interesting things about volatility is, like, if you look at the risk in the space, if you have something which is 10x over collateralized by Bitcoin and the volatility is 60, well, there's a risk. And one way to drive down the risk is to increase the collateral, but the other way to drive down the risk is decrease the volatility. So it turns out you're better off being like 3 times over collateralized with an asset with a 30 vol than 10 times over collateralized with an asset that's a 70 vol. And so I think that's what's happening now. The industry is growing up. It's becoming more secure. It will be accepted by banks. It will. I'll leave it at this thought, which is, when your bank tells you they'll buy Bitcoin for you and they'll make it really easy, and you can do it on the phone, it'll cost you $1 million Bitcoin. And when your bank calls you on the phone and says, you really ought to buy Bitcoin, it's a digital monetary alternative, and when they recommend it, it'll cost you $10 million of Bitcoin. And right now, no bank's going to recommend it, and they're not going to help you buy it, and you're going to have to jump through hoops, and you're going to feel really nervous about it, but you'll get to buy it around 100,000 or a little bit less than 100,000 of Bitcoin. And I think they're all 3 the same risk-reward proposition, and I bought it at 10,000. I'm buying it in billions of dollars of quantity at 100,000. I'll be buying it at $1 million. I'll be buying it at 10 million. And if you're back here interviewing me when it's 10 million a coin, and you're going to say, Michael, it all worked out, but Bitcoin's 1,000 times more expensive, and don't you feel bad that you convinced all these people to buy Bitcoin at 10 million a coin? I'm going to say, well, Bonnie, the entire ecosystem is much less risky now, And it's still the best investment option. I think it's still better than buying the S&P index. It's still better than buying a warehouse in Siberia. I'm going to keep buying it. It's just like buying Manhattan real estate in the year 2025 when your family started buying Manhattan real estate in the year 1700. Here's a business where there are no fires, there are no wars, there are no tariffs, there's no product obsolescence, there are no competitors, right? There's no property tax, there's no rent control, there's no expropriation. What if I had a business that was not facing all those risks? And that's what pure digital capital is. That's what Bitcoin is. But now, what if I posit this? What if I said all the money in the world is facing all that risk? And here's an escape from all that risk. And the only reason they haven't bought it is they didn't know about it, or they didn't have a channel to swap the risky thing for the riskless thing. So Bitcoin is powered by chaos because chaos will never go away. It's always going to devalue all of the traditional physical and financial capital assets. And it's going to be the driver that causes all the smart money in the world to sell their physical and financial assets and to buy a digital asset. And so really, as the world gets educated and as regulators create on-ramps, right? When your bank handles Bitcoin, when a big tech company can wire $1 billion to the bank every week and buy Bitcoin, they'll just be wiring $1 billion and swapping it out because it's easy and it's rational. So that's really what you're looking at, and that's why I think it's just a very elegant and beautiful asset.
Michael Saylor explains that Bitcoin thrives in chaos, unlike traditional assets that lose value due to inflation and political risk. Its scarcity and security grow over time, making it a strong, long-term digital asset. As big investors enter, Bitcoin becomes less volatile and more valuable. He also warns against short-term trading and urges investors to hold Bitcoin patiently, since most gains happen over years. With banks and companies starting to adopt Bitcoin, it's becoming easier to buy and a key part of the future financial system. Do you think Bitcoin is a safe asset during financial chaos? Would you hold Bitcoin long-term or trade it short-term? Let me know in the comments.